What's up guys, welcome to episode 4 of the trading course. In today's video we're going to talk about trends. It's something very basic but also very important in trading and in investing. So let's get started. If you already see it coming, you say, oh, you have an uptrend and you have a downtrend, that's it, okay, I can skip this video. Of course it's not that difficult, so it could be possible you already know this stuff, but I'll go over the basics again and also explain why this is important, so surely stick around for this video. It will again not be such a long video. So we have three types of trends: uptrend, downtrend, and sideways or ranging, however you want to call it. I drew three things and you can guess what is what. You have here the uptrend, price starts here and goes up; downtrend, price starts here and goes down; and sideways or ranging, price just sticks to a certain point and doesn't really move anything at all, just a bit up and down. So an uptrend forms when price makes higher highs and higher lows. You can see it here, you have a low, higher high, and a higher low, because this low is higher than this one, and you get a higher high. So in a full picture perfect uptrend, you see this: high, higher low, because this low is higher than this one; higher high, because this high is higher than this one; higher low, higher high, higher low, higher high. You get the story. This is really not that difficult. In a downtrend, same thing, but just reversed: lower low, lower high, lower low, lower high, lower low, lower high, because all highs are lower and all lows are lower than the previous low. So this is very basic stuff. And in an uptrend, you're mainly looking for long setups, and in downtrends, you're mainly looking for short setups. Why? Because you want to trade with a trend. The trend is your biggest friend. Of course, when price drops a lot, for example, Bitcoin is down 10% today, we're of course not looking for shorts anymore, because the short was already given. 10% dump is massive. We're looking to long to get a dip. But when you see Bitcoin drop 2% today, it was already down 3% yesterday, and just over the past week or the whole month is a bit downtrend. For example, we're in the bear market, how people want to call it. We're in a downtrend, then you're mainly looking for shorts, of course. So I'll show you now some examples of actually in charts, not with the arrows we draw, of uptrends and downtrends. For example, now currently when I make this video, I don't know when you watch it, maybe it's 5 years after, who knows. Currently Bitcoin is in a downtrend. You can clearly see this. Let's look at it. Get a high, lower low, lower high, lower low, lower high, lower low, lower high. Currently price is here, but price can easily do this to continue the trend. So let me make some levels quickly here. So what did I indicate here? These are all the highs. In a perfect downtrend, every high should be lower than the previous high, lower highs. Of course, in some downtrends, you can have, for example, this happen, where price does this, but then still drops, then we're still in a downtrend, but price tried to reverse from trend, but it's of course still a downtrend. It's not that, imagine price as this indicates, price did this, but still dropped after that, and price still ended up where it is right now, it would still be a downtrend. So it doesn't have to be picture perfect, but these are just examples you learn. Let's take a look at Bitcoin a year ago, or just the whole rally to the all-time high. Bitcoin was clearly in an uptrend. You can see it here. Let's start from this low, make a high, high low, high high, high low, high high, high low, high high, high low, and now you just can keep going on like that. And of course, like, we keep on going, and here we changed locally from trend again. So same thing, I'm not going to indicate it again. In an uptrend, you want to see highs that are higher than the previous high. And again, same here. Imagine price, let me do this for example, price completely dropped here. You have a lower low and not a higher low, but still price just gained again. It's not a reverse from a trend, it's still an uptrend. So these were the basics of trends, and now I quickly want to tell you guys what a reversal is. The reversal of a trend. More of that in the PA trading course, because reversals is a very common thing we trade. So imagine it's a downtrend. You get lower highs, lower lows, and price does this. So imagine price is here right now. Price created not a lower high but a higher high. So we could potentially switch from trend, from downtrend to potentially an uptrend. Now when can we say, okay, trend switch, it's now an uptrend? Price will probably come back here somewhere. This is the retest or the hold as we call it. And then price has to decide. Either they say, okay, we have enough liquidity as it's called, we have enough strength to change the trend, and then we swap from a downtrend to an uptrend. What can also happen is price comes back here to the hold, as we call it, and it's not enough, and price just continues the trend. Sometimes you have these gains that price closes before the previous high, before the previous lower high, and then you think, oh, it's another trend, but it's just a play the market creates, but it's not actually a change from trend. So don't just blindly look at, okay, this is a downtrend, lower lows, lower highs. If it is one single different thing, it doesn't work. That's not true. So, and of course a reversal also works in the other way. So we got a reversal like this, downtrend, change of trend, but also in the other way, you can just flip the chart like this, uptrend, then we lose a level and price gets in a downtrend. If you watched the previous episode about support and resistance, I learned you that support can flip into resistance and resistance can flip into support. And this also works with trends. Of course, trends are something mostly on the bigger time frame. You can also look at it on the 1 minute or 3 minutes, but that's not really that useful. But support and resistance are also visible and play a role here. Let me explain that. I drew an uptrend here. So when price is here, price can't keep going up, so this is your resistance zone. This is your resistance here. Price goes up, can't break that level, goes down. Then in an uptrend, of course, price goes up. Finally, price breaks this level, makes a new higher high. Then you see the higher low, bounce off this level. The same level that there was resistance here is support now here. And that's the same thing here. So here's resistance, you finally gain it, you retest it, and from this level, you continue the trend. That's the same thing in a downtrend. I'm not going to draw that. But so remember that in a picture perfect uptrend or downtrend, supports and resistance flip into each other. And of course, it's not always the case. It's not always a level, as mentioned. It's not a specific level support or resistance zone. But these zones are almost in every up or downtrend. You can clearly see that a zone price retraces to those zones. Let's talk about trend lines now. Trend lines are lines that indicate a trend. Wow. A lot of people use it. I personally don't use it, and I'll explain why. I'll first explain what it is. Trend line is a diagonal line that indicates a trend. So for example, let's look at here. Here we're clearly in an uptrend, so you can maybe, what am I doing? You can say we're in an uptrend now. So this is your trend line. I'm choking, guys, sorry. This is your trend line of this piece of price action. You can see price never really touches or barely bounces off those lines. So this is a trend line. We expect price to continue to move like this. If it stays in an uptrend, we expect price, as we see right now, to bounce between those two levels. Of course, eventually price breaks either of those, but these lines are used to indicate the trends. These are useful surely at the start if you are not really that familiar with this. Same thing for a downtrend here. What people do is, of course, they see the high here. This is a trend. Then from the other side of the high, this is a trend. So they expect if price continues this trend, the price does this. Okay. So these are trend lines. People use this to trade. I really don't like that strategy because trend lines, they don't have a meaning. They are just there to indicate a trend, but they don't have a meaning in the chart, like we explained with support and resistance, why these lines have actual meaning and price bounces of it, because there are buy orders, sell orders, and there's liquidity. This does not work like that. Trend lines are just there to indicate the trend. So that's why I and many people don't use them. You can use them as a beginner to say, okay, yeah, we're clearly in a downtrend now, I know this now, but maybe you can already, or later you'll surely learn to see. Of course, yeah, locally here we're in a downtrend. This is the daily, so it's the bigger picture. If you zoom out, yeah, we're clearly in an uptrend. I guess you can see that clearly that we're in an uptrend. So I don't really like trend lines, but again, you can use it. So I already mentioned this quickly early in the video, but why is the trend important? The global trend, and you can see that in 5 seconds, surely if you're an advanced trader. Why is it important to know is it should be part of your bias. What do I mean with that is if I'm sitting behind the charts and I say I want to trade today, I just quickly look at what is the trend. Are we in a downtrend or an uptrend? Why? If we're in a downtrend, and currently we are, of course, it's the daily, but let's say from here, there was 2 months ago, we're clearly in a downtrend, then you want to look for shorts, so that you play this move down and not for longs. imagine it was the other way around, and you would look for longs. Why? Because a trend is something very strong, and I really speak out of experience from this part. If you want to look for longs in a downtrend, you're not going to win or hit many. If you're looking for shorts in an uptrend, you're not going to hit many. Just ride with the trend. And I know surely in a downtrend it's hard for people, because people, and this is also proven, it's just a natural thing humans have, that they can way more easily and way more likely will play the move up and not down. That's just something proven and something humans do. So you can do two things against it. Just clearly follow your plan and your rules. If we're in a downtrend, I'm looking for shorts. Of course, you can still look for longs, but shorts should be your primary focus. And secondly, is invert your chart. You can do this here. Trading view guide and explanation of how this site trading view works will be later in the series. You just can invert your scale, and then it looks like you're in an uptrend, and then you can easily look for longs, because as mentioned, looking for longs is just easier for everyone. You don't have to feel bad because you long more. It's just something very natural for humans. But if you invert the chart, you can easily see, oh, we're in an uptrend, yeah, where can I long? While in reality it's a short. So this was already the video about trends. It's something very important, something very basic, probably already heard of it as I mentioned, but I hope you understand it now. It's not that hard. You don't have to practice anything. Maybe you can just look up a chart, look at Bitcoin, look at Nasdaq, look at anything you want, and just do an exercise. Are we currently on the daily and the weekly? Are we in an uptrend and a downtrend, or are we just going sideways? Are we ranging? That's the exercise. If you can look at it 5 seconds in, you probably think, oh, we're clearly in an uptrend. Then you know, of course, then you know I understand this topic, and then you can move on to the next episode, where I'll surely see you all.